that the current size of the tea bags in terms of contribution to total tea is very small. It is in the very, very low single digits at this moment. But you would have noticed that over the last few months, we have dramatically expanded the range of tea bags and offerings that we've got. We now have a range of not just classic tea bags which are with black tea, but a range of flavored tea bags which we've got. We've got a range of green teas that we've got. We've got also flavored teas from Western flavors, etc., which perspective, and therefore we really have quite an impressive range. We are, over the last few months, we've started developing a market development model, and we will now consistently be deploying this model over the next few years to grow the size of the tea bags market as we move forward.
Okay, Nitin, thanks for this and all the best.
Thank you so much.
Thank you.
Thank you, Mr. Roy. Well, the next question is from Mr. Richard Liu from JM Financials. Mr. Liu, you can go ahead and ask your questions, please.
Hi, thanks for taking my question and congratulations for a good result. I'm just coming to the slide 10 where you talked about media intensity. I was a little taken aback with, the sharpness of the move, especially in S&D from about 85 index to about 118. If you could just throw some light on, what's the source of, this kind of a sharp move? I mean, who are these, guys who are contributing to this increased intensity?
So again, firstly, I think what you noticed is absolutely correct. It has been a significant increase. But once again, we shouldn't ever get carried away by what happens in a quarter. That's, I think, the first point I would make. Some of it is simply a level of activities which are going on between us and other players in the market. The other aspect is, if you recollect several quarters ago, as when costs were going up and commodity costs were increasing, we had seen a moderation in spend as people were managing the overall shape of their P&L. I think we've seen some softening of PFAD, which is vegetable oils, etc., in the marketplace, and a plateauing in terms of what's happening to crude. So I suspect it is a combination of a slightly more benign cost environment which we have seen in this period, competitors and the various activities and innovations that they might have had, which has led to this outcome. We have always maintained that we will watch this carefully, and you would have noticed that despite these increases which have taken place, we have managed to stay competitive. We have a way by which we are able to track the media intensity at a period of a week and 2 weeks and be able to correct our plans as we move forward, as a result of which, unlike previous quarters, our spend this quarter have moved up by 70 basis points from 11.8 to 12.5 to remain competitive. How it pans out into the future, time will tell. But you can be certain of one aspect, which is our principle of spending behind A&P will remain unchanged. It will be a function of our innovation intensity and the needs of our business, and making sure that relative to the others, we remain competitive.
Okay, if I can just go a bit on a tangent, do you see this somehow, the intensity of the S&D media spend somehow correlatable to the kind of margins you make in, on S&D? And related to that, does this, phenomena of, media intensity adjusting itself up and down sort of put a natural cap to the margin that you could perhaps make on this segment?
So, Richard, in general, we have consistently stayed away from trying to give any kind of future guidance, whether it is on top line or A&P or margin. Therefore, very, very difficult to say what is the outlook for it. Is this reached the ceiling? Is there more room to play, etc.? It's something that's really very, very difficult to pan out. I would just word once more that we just don't look at the one quarter and draw any conclusions on any aspect of the performance.
So I think this, in addition to what Sridhar has said, the only comment I would make is to remind you of the goals that we set for ourselves, which is to find ways and business models to grow our business in a way that is competitive and profitable, which means modest and consistent increase in operating margins. We do not believe there is any reason for us to feel that cannot be delivered.
Sure. No, I mean, don't get me wrong. I wasn't asking for a guidance. But what I meant is that, if you look at, probably if you study perhaps your own mindset as a businessman and also your competitor's mindset, do you get a feeling that, that maybe, the kind of margin that you are earning right now is fat enough for competitors to really start aggressive again, such that, the dynamics of the competitive situation plays out such that you may not really be able to, to go much beyond this level of margin, because either, you will face raw material cost pressure or, people will spend overtly on ads and promotions.
So I think I understand where you're coming from, Richard. It's difficult, but it's a hypothetical question in terms of how things will move. You should be sure of one thing, that we will not compromise our ability to deliver competitive growth. And therefore, our brands will remain competitive. That's our primary objective. And we will make sure that we do that and find ways to ensure that we deliver on our overall goals of getting competitive and profitable growth in a consistent manner. And from time to time, there will be different levers which will come into play, and we will bring all of them to bear to achieve these outcomes.
Sure. Thanks for that. Very useful. If I could just push in, one more. If I were to look at, the absolute quantum of other expenditure, is there some kind of an investment mode, something that you all are investing in again, which led to this high increase, or is it just something, quite natural?
So Richard, thanks for the question, because this may also be there on some other people's minds. The other expenditure line that you see really has two components, one of which is clearly driven by size of business growth. So, for example, things like freight or things like processing expenditure, etc., etc. The other aspect is that in relation to certain costs that we would incur in terms of the services, and you see that in our income, other operational income, the income from services, there you see the revenue from those services, but the corresponding costs, some of them come in the salaries line, some of them come in the other expenditure line. So it is not just a function of turnover, but it's also turnover and the other operating income.
Okay, got it. Right. Thanks a ton for that, and wish you all the best.
Thank you. Thank you. Just to say, while Saurabh comes on, just to say there are a couple of questions I think that we've got through the net, and we will certainly answer them at the end as we finish the questions that come in live from the call. We will certainly answer those questions as well. Saurabh, over to you.
Thank you, sir. Thank you, Mr. Richard. So before we move on to further questions in the audio, I will request all the participants once again, if you wish to ask any question, please press 0 and 1 on your telephone keypad and wait for your name to be announced. I would also request the participants, you can always use the chat facility over the web if you wish to ask any more questions. So the next question online, we have Mr. Vivek Maheshwari from CLSA. Mr. Maheshwari, your line has been unmuted. You can go ahead and ask your question, please.
Thanks for taking my question. 3 questions. First clarification on CSD again. In the first half of this calendar, we had number of players complaining about slowdown in CSD, etc. And if I refer to my notes for the previous quarter, which is first quarter, you categorically mentioned that CSD is around 6-7%. It is not material, and there is no slowdown at all that you were seeing at that time. This is exactly the time when all the other players in the industry were seeing a slowdown. Why is that the CSD impact is coming to you with a lag?
Well, to be honest, Vivek, that's a question that is difficult to answer. But just to comment on, both the June quarter and the current quarter, it is indeed, I think, the right position that at the time when we had our June quarter results and we announced our results, in June quarter we did not see a slowdown in terms of CSD. Whereas in September quarter, the reality is, and I think Nitin gave some specific information with respect to that the CSD channel has actually declined in sales for us. Now, why has it come with a 1 quarter lag to us is very difficult to answer. Anyway, it is not great news, so coming a little bit later is not such a bad thing.
Okay. And any sense, no formal guidance from you, but any sense, how do you see this? What is your assessment for the coming quarters?
So So, CSD is an important customer for us, and we continue to work with them. While, the decline is never great news, we also understand that, they are having their own constraints, and we are working with them to see, how do we best manage. They are an important customer, and we will continue working together. We don't have any formal guidance from them or otherwise, and in any case, we don't give any guidance, as you know.
Understood. Okay. Second thing is on the on the growth moderation, that the point that you made in the past quarter, or I think 2 quarters, you have been talking about packaged foods. Now, very specifically, if you strip off the impact of CSD and the Fair and Lovely sachet price hike that you have taken, would you still say that, excluding this, are you still, seeing a slowdown or whatever growth moderation? Or if you adjust for this impact, the fact that consumers with the lag will, the price hikes will be absorbed in the market, I mean, how do you see that? Is there genuinely some moderation, or you would say that, the sachet impact, as it kind of gets into the market and it is absorbed, things are, quite okayish on the ground?
So I think I want to just distinguish between 2 things as I answer this question. The comments which we made in terms of slowdown in discretionary categories, or some slowdown, some moderation, is basis what Nielsen is reporting. So that's, I think, point number 1. The comments that we made in terms of CSD and Fair and Lovely sachet, if I was to say, keeping that in mind, keeping the fact that CSD had such a big impact, and in categories like personal products the impact has been substantially higher, and the Fair and Lovely slowdown, then we feel quite pleased with our growth and do not see any broad-based slowdown in our personal products categories.
Okay. And, on the Fair and Lovely thing again, so if you strip off this impact, you would say that growth rates are intact, or you will say, that there is some moderation?
I would say growth rates are in line with our expectation in terms of both PP and skincare, if you take the context that was talked about. And, obviously there were more details that Nitin also provided in terms of the other parts of our PP portfolio.
Okay. And the last bit is on other income. There is operating income is up some 65%. So is there any one-off over here, or what has contributed to this kind of growth?
So if we're talking about the other operational income, it is influenced by the amount of activity that takes place, in India, in some of the regional hubs that operate out of India, which, meet the needs both for the Indian business, but also some of the business units of Unilever outside of India. To the extent that the activity levels are gone up, there is a higher level that is invoiced. So that the gross invoicing value comes into the other operating income. The costs then feed through, as I mentioned in response to an earlier question, the costs feed through in the salaries line as well as in the other expenditure line.
Okay, and specifically a few quarters back, there was an impact of mark-to-market which was getting recorded as a part of other operating income. Is there anything substantial or noticeable over here because of MTM?
Nothing material. Nothing material.
All right. Okay. Thank you very much, and all the best.
Thank you, Vivek.
Thank you, Mr. Maheshwari. Well, the next question is from Mr. Varun Lochav from Religare Capital Market. Mr. Lochav, you can go ahead and ask your question, please.
Yeah, thanks for the opportunity. So my question was related to the S&D segment. Can you just throw some light on how, how the category growth is performing?